Good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global markets first. The US markets had yet another positive day, about a quarter of a percent for the Dow and the Nasdaq, the S&P about 0.15%. Big changes there, but marginally positive, if you will. The other cues, the 10-year yields or otherwise the 3.97s are staying high. VIX just flattish, and of course the dollar index at 101.73. So those days of sub 100 were few and far in between. Gift Nifty, yesterday because we had a positive day close, the expectation is that we might continue to have slightly positive momentum, if you will, flattish with maybe a marginal positive bias, but nothing conclusive, if you will. Global news flow, across the world on various commodities, prices are ranking up. So traders are paying nearly 2,000 or $200,000 a day to ship gas as tankers have become scarce around the world, especially in the Western region. Oil prices hit multi-month highs on tightening supply. Arabica coffee has soared as producers roll back and as well as reserves are lower. In other news, Apple supplier Foxconn is planning a $500 million components plant in India. As Bloomberg learns, the announcement could be happening as early as this week. And normal rains are seen in the second half of India's monsoon season as per the IMD. So the news flow, except on the commodity front, is not looking all that pretty. And that might have a bearing on what happens to, margins of most companies, because the expectation most the second half will see a downtick. Well, that might not necessarily be the case, especially on oil, by the way. 4 or 5 straight weeks of an uptick, and that's not great news from a risk perspective as well. But I don't think we are in the alarming zone as long as we sub the levels of $90. I think it should be okay. Key stats of trade yesterday: the Nifty 50 gained about 107 points to close at 19,753. The Bank Nifty increased about 0.4%, with IDFC First Bank and IndusInd Bank leading the gains. Broader markets too did okay. The key is that the Nifty metal space was the best performer, followed by Nifty Energy, like I said, commodity stocks, and FMCG ended in the red. Again, commodity price uptick led. Now, this is not necessarily a pattern that will follow every single day, but you could see the pattern, right, in trade yesterday at least, that the markets rewarded commodities, punished sectors which will not benefit from a commodity price uptick, and it was quite evident in trade yesterday. So the volume profile, and that's my trade setup, the volume profile indicates that the index has a strong support around this 19,500, 19,550 zone. The put OI is maximum at 19,600, technical levels at about 19,500. So between that zone is where we have the strongest support. And resistance at 19,800 and 20,000, no surprises there. When I looked at the commentary from a lot of technical experts post-markets yesterday, there seems to be a bit of a technical reversal happening in select IT names, and therefore that's not ruled out, especially with the valuation support that some of the stocks may be having. But let's wait and watch. I mean, there are a bunch of people who've written in their notes, a couple of them have messaged me as well about what's happening in IT and a bit of a reversal and support zones. Let's see if that holds. I confess I'm not an expert in technicals. I do not know how to check them at all. I'm just merely telling you that because a clutch of people have written about this, and therefore it's important to take note of that. What I saw was that building material stocks and fertilizer stocks are seeing some traction. Yesterday, I mean, you had an Astral, you had APL Apollo, you had a clutch of other building material names doing well. These are expensive stocks gaining up 3-4% a piece, and that's the story around building materials, that you're seeing select names which are actually delivering, doing well. By the way, it's not necessary that all of them will do well, right? Because Supreme, for example, post results actually came off about 7-8%. So it's yesterday fertilizer stocks, Coromandel, which did very well. Paradeep Phosphates was up about 2-3%. So select fertilizer stocks also are seeing some traction. BI is buying about 2,488 crores. So the flows were not the strongest, if you will. And the earnings in today's session, like as now towards the fag end of the earnings season, the last 15 days, you will see select days wherein we will not have too many index names coming out with numbers. But today, reasonably important, Adani Total Gas, there is Bikaji, There is Escorts, which is supposedly going to come out with good set of numbers. GMDC very likely will come out with good set of numbers. And there is PVR Inox, which is slated to come out with numbers. So that is to be watched out for as well as Reddington. So these are a few stocks that I will certainly watch out for. Now, in terms of stocks to watch, firstly, the auto sales expectations. And I don't think there's too much anticipated from the two-wheelers in particular, except for Royal Enfield. So that is one name to be watched out for. M&M Auto Division might have a decent outing, and Ashok Leyland might have a decent outing. So the expectations are not very high. And therefore, if any of these businesses or any of these companies manage to beat those expectations, then you might actually have, who knows, a decent run into some of those. Now, the numbers, Maruti was in line with estimates actually, not ho really. Revenues up 22%, EBITDA was up 56%. Margins came off a little bit, but the company said that the demand is normal currently and momentum should continue, led by new product launches. So Maruti is one to watch out for. Now, the thing about Maruti is that aside of the numbers, they have decided to terminate the contract manufacturing agreement with Suzuki Motor Corporation, and they have exercised the option to acquire shares of Suzuki Motor Gujarat from Suzuki Global. The mode of acquisition, including consideration to be paid to SMC, shall be decided in a subsequent board meeting. Now, the thing is, I looked at some scenario analysis from people, and the scenario analysis suggests that if Maruti decides to pay in cash 13,000 crores, then that will lead to about a 4 to 5% earnings cut and 80 basis points reduction in return on capital. If they do equity, it will lead to a 4.4% equity dilution and ROC dilution of about 3 percentage points. Either ways, we'll see a bit of ROC dilution and either equity dilution or earnings cut. So net from what they decided earlier, there is a change there, and therefore maybe the market may not like it. So let's wait and watch. When I looked at the brokerages, no big concerns. If anything, people have said that Maruti might actually do well because of the gains in the gains that they've clocked in the SUV segment. And the company said that the demand is normal currently, but momentum should continue, led by new product launches. So maybe there are some positives there. I would suspect that Maruti could have a slightly iffy start, but let's wait and watch. There is a clutch of other names that have come out with an inline set of numbers. So percent YOY at 4158 crores versus 3544 crores. So that was largely in line. EBITDA at 468 versus 449 crores, up about 4.1% YOY. But the business looked okay. Margins at 11.3%. Let's move this plate away of Bosch. Margins were marginally lower, and net profit for Bosch was up about 22% YOY. So on that, on per se, the results seem to be in line with estimates. Then HG Infra is the other one that we should bring up for our viewers. So revenues were up 22% at 1351 crores versus 1105 crores. These are a good set of numbers, I thought. HG Infra really. So sales were up about 19%. EBITDA was up about 26%, if I'm not wrong. Okay, 41%. EBITDA margin at 20.8 versus 17.9. Net profit up 37%. Well, the numbers seemed okay, really. Maybe slightly different, but broadly, I think the stock did okay, and numbers looked okay, and therefore the stock could react positively. Let's do away with the plates. Let's just do away with the plates, please, if we can. Thank you. Okay, so HG Infra is the other one that is to be watched out for. Best AgroLife. The results were different amongst the agrochemical pack, if you will. So sales at 612 crores were up about 32%. Net profit up 126% at 91 or 90.5 crores versus 40 crores. Margins at 21.19 versus 14.24. So on revenues, bottom line as well as margins, the stock did really well. The company did really well, and that's to be watched out for. So watch out for Best AgroLife in the session today. That is the other one that came out with a good set of numbers. Overall, I had a flattish kind of numbers, so no great shakes. Power Grid revenue flat, lower taxes resulted in a good quarterly PAT. They announced a 1:3 bonus as Power Grid, so therefore that stock, who knows, might react slightly positively. So that's to be watched out for as well. Link was an inline quarter, no great shakes there. UPL was a weak set of numbers, very weak set of numbers, and this was anticipated, of course. In fact, brokerages have not been too kind to Link, so that is to be kept in mind. And Sumitomo Chemicals was not the best of numbers, you have to admit. Sales at 724 versus 986, down about 27% QOQ or YOY rather. EBITDA down 57% YOY. PAT at 62 crores versus 138 crores, down about 55% YOY. So it was not it was not a great quarter, and therefore there could be an issue for Sumitomo. There could be an issue for Keynes Technology as well. For a stock which is trading at a TTM PE of 110 times, not a great quarter. Sales at 297 crores versus 197 crores, up 49% YOY, which is fine. But EBITDA at 41 versus 24. Yes, YOY was doing well, but QOQ missed out a trick. PAT also YOY did okay, but QOQ did not do well. So mixed set of numbers. If I just look at quarter-on-quarter numbers, a 35% downtick in PAT is not something that you expect from a stock which is trading at about 110 times. So that's to be kept in mind. IPL top line was maintained, but clear destocking at play. Some mixed set of numbers. You really can't do much. Now, stocks that should be in focus are two or three. Firstly, NTPC. Okay, let's do with these and then come to the others. Cochin Shipyard, it's been kept as it's been given a special status by the government, so that's to be watched. DLF, media reports suggest there is an OFS, so that's to be watched out for. 3% odd stake being sold by the promoters. And Welspun India, very strong con call, has spoken about restocking happening, and that's to be watched out for. So all three, DLF of course might have a negative connotation. Welspun India, which gained 8% yesterday, con call seemed positive, so maybe some more positives. Cochin Shipyard might be positive, and two or three more stocks that you got to keep in mind. NTPC, the company's unveiled a detailed roadmap to 130 gigawatts by FY32 and has upped the renewable target for FY26, if I'm not wrong, as well. So NTPC could be in focus. The stock is anyways on a technical uptrend, so watch out for that. Navin Fluorine could be in focus as the CEO of the CDMO business has resigned. The numbers are also slightly wobbly, so this could actually hurt the stock today. And we've spoken about, of course, Maruti-Suzuki at length, so I won't get too much into that. But yeah, the termination of the contract could be an interesting one to watch out for. So do keep that in mind. If indeed there are some swaps for the lithium-ion battery companies, then Excite could be in focus. Not Amara Raja, because Amara Raja doesn't have those plans, but Excite could be in focus. So watch out for Excite as well. A clutch of conversations lined up today on BQ Prime. So at 9 a.m., Amit Sachdeva joins in from HSBC to talk about their India strategy equity report. Talking point with Shiv Puri of TBF Capital Advisors at 10. Dipali Goenka of Welspun joins in at 12:30 to talk about how strong a quarter was for them, and that would very good conversations lined up during the day on BQ Prime. Do try and tune in for that. Thanks so much for tuning in to the Trade Setup.